Hello friends, today we are going to discuss about the ledger. This is the second steps of accounting cycle. As you know, the journal is the first accounting cycle. So from journal we proceed to the ledger. Ledger is the summarized and classification process of accounts of the journal transactions. In journal, we have recorded the transaction on the basis of accounting rules, modern approach or traditional approach. So from journal we'll go for the recording of transactions in a classified and summarized process that is called ledger. Ledger is a book in which the different accounts are maintained. This account records the transactions in a very classified manners. So from journal the transactions are transferred to the ledger, and in ledger the accounts are maintained separately or individually to show the balance of the transactions. So in journal the major limitation is that we are unable to identify the particular account's balance and the total summarized form of transactions. So that ledger helps to solve those problems which we faced in the journal. So in ledger we are able to know the balance of each accounts and the sum total of the transactions happened in a particular periods or the months that is to be recorded in the particular ledger accounts. So ledger is that's why ledger is called the principal books of entry, and it is also known as the secondary books. The primary books is journal, so ledger is the secondary books. It is the second books in which transactions are recorded, and it is the principal books of entry in which the transactions are recorded in a account form. So let's come to the ledger. That is the basic part of the ledger, that is the how ledger account is to be prepared. So that is the ledger. In the ledger, that is basically it is a book in which the different accounts have to be maintained, that accounts have to be prepared, and that ledger, that is the process of ledger is that the steps. Steps of ledger, that while we are going to record the transactions in the ledger account, the following steps is to be followed. First, that identify the transaction to be recorded. Then second, identify the accounts to be maintained. Then third, record the transaction in the particular head of account. So there is the 3 steps. Follow the 3 steps for the preparation of the ledger. That is, identify the transactions. Second, identify the accounts to be maintained. Then record the transactions in the particular head of account. That is posting. That means the posting is the process of recording transactions in the books of ledger to the particular head of account is called posting, or it is the process of transferring the journal entries to the particular ledger account is called posting. That is the posting. We will do the posting. Then fourth step is balance the account. So the last steps of the ledger is balancing of accounts. That means both the debit and the credit side of the accounts is to be balanced to find out whether there is a debit balance or credit balance. Next, there is the format of ledger. Ledger. This is the format of ledger account. It is a capital word like T. That is a T form of account. That means as the capital English alphabet capital letter T is having two sides. That is left side and this is right side. So the left side of the ledger account is called debit side. The right side of ledger account is called credit side. So that is the account which is to be prepared, and this ledger account records the transactions in both the sides. This is debit side, left side is called debit side, right side is called credit side. The same equal number of columns maintained in the left side, also in the right side. That is, first column is your date column, that is the date of transaction on which it is to be recorded. As for the journal, you will record the transaction as the date wise, first year, then month, then the date. Then particulars, that is the name of the account to be debited. Then journal folio column, that is the reference page number of the journal book on which the transaction is to be recorded. Then the amount column, that is the amount is to be recorded, the debit amount. So likewise, the right side also the same equal number of columns. First column is your date column, then particulars column, then the journal folio column, that is the amount column. Date, that is the date on which transaction is to be recorded. particulars, that is the transaction to be, the account to be credited is to be recorded in the credit side. Account debited recorded in the debit side, account credited is recorded in the credit side. And then general folio column, reference page number of the general book, then the amount column. So that is the format of the ledger. So after the recording of the transaction, it is to be balanced. So let's come to the example. That is the first transaction is of paid salary, rupees 10,000. So journal entry is salary account debited to cash account. $10,000. So this is the journal entries which is to be now to be transferred to record the transaction in the ledger account. So they first identify the transactions. This is the transaction. Then identify the accounts maintained. How many accounts will maintain here? One is your salary account, another is your cash account. These two accounts you have to maintain in the ledger. Then record the transactions in the particular head of account. So this is the format of the ledger. First, suppose say prepare it cash account. So this is the cash account we are maintaining. So cash account. Then second one is your suppose say salary account. So there is the cash account. This is salary account. So this is the transaction, salary account debited to cash account 10,000 rupees. So we'll record it first salary account, then second one is your cash account. So salary account, this is your debit side, this is your credit side. This is date, particulars, general folio, amount. So date, particulars, general folio, then amount. This is debit, this is credit, cash account, this is salary account. First transaction, there is a salary account debited to cash account. So cash account, this is the salary account. Now here, this is the journal. We are now to go for the posting, for the recording of transactions. So salary account is debited, salary account debited to cash account. So you have to write here. So in the date column, write date. Suppose 2020 October 1st. That is to cash account. The amount is 10,000. So that is the suppose this is 2020 October 1st. Salary is paid. So salary account is debited with the 10,000 rupees. Salary account debit side right to cash account. Salary account to salary account will not be retained. That is a mistake. That is a wrong. So don't write salary account in the salary account to salary by salary. That is a wrong. That is a mistake. You have to write the opposite one. So the best technique, the mechanics for the posting of transaction is identify the journal transaction to be recorded, find out the accounts which is debited. So salary account is debited here, we are maintaining the salary account. So write in the particulars column to cash account, the opposite one, to cash account is credited. So there is a to cash, salary account debit, because it is a debit. So write debit side, there is to cash account 10,000 rupees. So now comes to the cash account. This is the cash account. So in the that is the 2020 October 1st. So here cash account is credit means right in the credit side. So cash account credited by, you have to write credit side by salary account. That is 10,000 rupees. So this is cash account is debited, right in the debit side in the salary account. Salary account is debited, right in the salary account in the debit side. The opposite other account, that is a two cash account. Here two cash account is there because it is two cash account, 10,000 rupees. So this is goes to here. So salary account is debited, we had written in the debit side, two cash account. So cash account is credited, we had written. So in the cash account, there is credit side, there is buy salary account. So this is the best mechanics, very simple way of pushing the journal transaction to the ledger account. That is the account which you are maintaining, find out that that account is debited or credited. If it is debited in the journal entries, so in that particular account, write in the debit side the other account, that is two cash account. So if you are maintaining the cash account, since cash account is credited here, write in the credit side the other account, that is buy salary account. So when you write credit side, start with the word buy, and when you write in the debit side, start with the word to. So likewise, suppose say the first transaction is another transaction to cash account debited to capital account. So there is another transaction. Now you see there is the cash account is debited here. So you have to write debit side, that is to capital account. So there is a suppose a 1 lakh rupees. So right, that is 2020, that is October 1st again. So that is to capital account, that is a cash account is debited here, right in the debit side of cash account to capital account. So there is the cash account is debited, capital account is credited. So there is to capital account, that is 1 lakh. So there is the process of pushing the journal transactions in the ledger account. So likewise, you have to maintain the capital account, and since capital account is credited here, you will write in the credit side by cash account. So this is the process of pushing the ledger transactions in the particular ledger account from journal entries. So this is ledger process of pushing. After pushing the transactions, what we will do? The balancing of accounts. That how do we make the balancing of account? See, that is the balancing of accounts. Why balancing of account is required? Because to know at the end of the period, to know the balance of each ledger account, how much balance is left. Because ledger is the basis for preparing your trial balance, and from trial balance we will prepare the financial statements, that is profit loss account, trading profit loss account and balance sheet, to find out the results of the business, that is profit or loss or financial position of the business. To know the financial position of the business and the profit or loss of the business, we need balancing of the ledger accounts. Without balancing of ledger account, we cannot prepare the trial balance and financial statements, because ledger is the basis. That's why it is called principal book of entry, the secondary books of entry. That is the secondary books of entry, because it records the transactions after the journal is recorded. That's why it is called secondary books of entry. And it is the principal book of entry because the principal accounts are maintained. Various accounts are maintained on which you will maintain your profit loss account, and balance sheet. Without ledger account, we cannot prepare the financial statements. So that's why we need the balancing of the ledger accounts. That balancing of ledger account is done two ways. That is, if debit side is more than credit side, then it is debit balance. If credit side is more than debit side, then it is credit balance. So there is the balancing of ledger accounts. Balancing of ledger account is two types of balancing of ledger account is to be find out. One is your debit balancing, another is your credit balancing. Debit balancing means if debit side is more than the credit side, then it is called debit balancing. If credit side, that means if credit side is more than the debit side, then it is called credit balancing. That means when debit side is more than the credit side, then the balance amount is to be retained in the credit side, the excess amount of the debit over credit. That is by balance carried out. So that is retained in credit side by balance carried out. That is to balance carried out. If credit side is more than the debit side, then it is retained on the debit side. That is to balance carried out. What? The balancing of ledger account. Now we see this is the cash account. We will balance it. So cash account total debit total is coming 1 lakh rupees. First make the debit total, then credit total should be 1 lakh rupees. That means the debit side 1 lakh, but credit side is only 10,000 rupees. That means excess of debit over credit is 90,000. The difference amount, right, on October 31st, that is by balance carried down, that is 90,000. So total is 1 lakh rupees. So this is balanced. This is called debit balance. This is debit balance. That means debit side is more than the credit side. The excess amount, the excess of debit over the credit is to be retained in the credit side by balance carried out. Then the amount which is retained in the credit side by balance carried out in the next, this is October 31st. So next month, that is November 1st, that is brought forward, that is to balance brought down 90,000 rupees. So that is the debit balance. That is the balancing of ledger. After balancing, the double line is to be put, so that it is to be balanced. This month, this period is over, so next month begins. So that is the for the balance brought down, that is 90,000 rupees. So likewise, if this is the, suppose this is salary account, so take it capital account. Capital account, that is 2020 October 1st, that is by cash account 1 lakh rupees. So this is suppose cash, that is capital withdrawn, that is to cash account 10,000 rupees. Then we will make it the balance. So this is credit side is 1 lakh, but debit side is 10,000 rupees. That means make the total credit first 1 lakh rupees. That means the credit side is more than the debit side. That is find out the amount, how much amount is excess. That is October 31st to balance carried out. C/D, that is 90,000. That means excess of credit over debit is 90,000. This is credit balance. This is credit balance. That means this amount is to be brought forward for the next month. This is November 1. That is by balance brought down. That is 90,000. So this is balancing of ledger account. This is a debit balance. We had seen when excess of debit over the credit retained on the credit side by balance carried down. and next period, next month of the beginning of the period, it is to be 2 balance brought forward. Then the next transaction continues. Likewise, in the capital account we had seen the credit side is more than the debit side. So the excess of credit over the debit is to be retained in the debit side. That is 2 balance carried out 90,000 rupees. That is the called credit balance. And this amount is again brought forward to the next month of the beginning. That is November 1 by balance brought down 90,000 rupees. So this is balancing of ledger account. Posting of ledger account we had seen. Then balancing of ledger account we had seen. So there is the likewise all the ledger accounts is to be prepared, summarized, and the balancing of the ledger account is to be done. Hope you will understood it. Thank you.